Victor, welcome back on Crypto Weekly. DATs are still a big topic of conversation.
Yeah.
How do you see the DAT landscape over the coming months? Do you believe there'll still be premiums, there'll be discounts, we'll see new DATs come up? How do you see the landscape next couple of months?
So there is roughly 75 DATs out there, and they manage roughly $100 billion. Still, the main one is strategy. I actually think DATs are absolutely critical for digital assets because they help access new customer, new investor, which is a traditional finance investor. However, I think DFTs have to communicate better on two things: how they are generating yield on the underlying digital asset, and what else they are doing beyond being a treasury manager.
And how do you think that ecosystem will evolve on these two elements you mentioned? For example, generating yield. Do you believe in the future, if you're buying a DAT of X token, you need to optimize it versus just holding it spot?
Yeah, so versus ETFs, DATs generate a much higher yield because on top of staking, they can also leverage digital assets in DeFi, and they can also use capital markets fundraising like ATMs, at the money issuance to raise more capital and generate more yield. So I think it's absolutely critical for those DATs to communicate on that yield. I think Q1 will be very important quarter, Q1 2026, because that's when the DATs will communicate on their Q4 results. That's where they can showcase the yield. Secondly, only the best will survive. So I think there is consolidation which will come right after Q1 next year, and I am closely looking at potential opportunities.
And do you believe, Victor, the capital that has gone to these DATs, is it new capital that is entering the, let's call it the broader digital asset space, or this is actually capital that would have otherwise gone to buying spot crypto directly, even the ETFs?
I think it's 50-50. So on BTC and on Ethereum, thanks to BMNR and SBET, it's mostly new capital, so traditional finance. But we still receive roughly 2-3 DATs per week. RockawayX as an investment company, we receive 2 to 3 DATs per week to invest into. Zcash, for example, and other digital assets. And mostly when I look there in composition of investors, those are crypto native investors.
Interesting. I just want to pivot quickly to the whole, let's say, non-public markets investing. Obviously, RockawayX is a big investor in multiple tokens in the market. What's your view on the outlook for other L1s and new tokens that are being launched in the ecosystem? And do you believe we'll have even less frenzy on these brand new L1s that are being launched?
Yeah, we manage roughly $2.7 billion over hundreds of tokens. I think the L1 game is over. I think BTC is, digital gold. Ethereum is a stablecoin infrastructure play. Solana is a L1 for tokenization. I don't see many opportunities. I am more excited by, I would say, business models with revenue, which launch their own L1. For example, Hyperliquid, decentralized exchange, generating hundreds of millions of dollars revenue per year. They launch their own L1, so then other people can develop, for example, lending, borrowing market like Hyperland we invested into, or a private exchange like Silhouette we also invested into. So that's what I'm excited about.
Interesting. So actually, it's a big statement there that the L1 ecosystem is dead. It's really a couple of them that will dominate. And now you said you need to have successful businesses that are powering that. Yeah. And what's your view based on that? So some of even the specific ones, for example, we recently had Circle launch its Arc blockchain, and a lot of firms are launching use case specific L1s. You think that's dead as well? It's not going to be much traction there.
I don't really see the reason. I think, there is no real technological innovation. Those blockchains have limited set of validators. Yeah. It's not really decentralized, so it goes against, our ethos at RockawayX.
On RockawayX, you guys are big investors in Solana and early backers of it. Are you still very bullish on the Solana?
Absolutely. So that's why I wrote the report called whysolana.com, where we show that Solana will move from roughly $200 right now to $900 in the short term. And has the potential to go to $2,000 and $6,000 if there is a certain amount of tokenized assets on Solana. It's just a matter of time.
It's interesting. That's a big, bold prediction. So what use case do you apply, or what niche do you believe Solana will play compared to the other handful of L1s you mentioned you believe will have in a couple of years?
So I think, financial markets are a big industry, $500 trillion. and we have not really automated them using blockchain. So far, use cases have been limited. Stable coins, only $300 billion. I think Solana will be the chain of what we call internet capital markets. So everything, lending, borrowing, investments, tokenized stocks, tokenized fund, all of this will happen on Solana. And if, $2-3 trillion of assets are tokenized on Solana, then even the chain can become $1 trillion chain, which, will drive the SOL price as well.
Interesting. That's very interesting on that perspective. What do you believe? Obviously, you're spending from a UAE perspective. We're having this interview today in Dubai. What do you believe these L1s that we're seeing, like Solana, for example? Do you believe some of them will have a nexus with actually cities, countries, or they'll be operating completely decentralized on an ongoing basis?
Yeah. That's a good question. So I live in the UAE. We are based here, and the UAE has a very strategic geographical location, because it's between Europe and Asia. And that's where most of transactions are happening currently. So that what I want to build is an epicenter for digital finance here in the UAE. And I have 3 steps on that roadmap. Step number 1 is staking. I want to build a big staking epicenter here. We are already in discussion with Etisalat to leverage their data centers. I want to have 20% of Solana being staked, meaning transactions produced here. Second step is trading. I want to have matching engines of, for example, Binance, Hyperliquid, Bybit, coming from Tokyo and Singapore to this region, because you want to be collocated close to the validators, because then traders, they have much shorter time in terms of latency for arbitrage opportunities. And third step is tokenization.
And you believe these things will play a physical role as well on that perspective as we see the growth of the ecosystem. Yeah. And last question, Viktor, before I let you go. What's the biggest risk you think we're facing as a crypto community right now, as an ecosystem? Markets are growing. You're very bullish on Solana, among other things. What is, you believe, the biggest risk that we have? Is it macro risk, or is it really crypto-specific risk that we have?
No, I would say, look, we are still a very small industry. $4 trillion, and 60% of that is Bitcoin. So we need to have more use cases. That's what I am fighting for every day. And for example, we co-founded a company called Henri.finance, on-chain reinsurance. It's very easy. You can just connect your wallet and invest stablecoin and generate 20% yield on your dollar, on your stablecoin, very easily with a couple of clicks. No need for a bank, no need for paper trail. That's what I'm excited about, and I'm fighting every day to have more use cases of real-world assets and tokenization on-chain.
Use cases, and especially when the RWA angle, that's something we're looking forward to. I think a lot of excitement around that topic as well. Thank you, Viktor, for joining us. That was Viktor Fischer, the CEO of RockawayX. Thanks for being with us on Crypto Weekly.
Thank you, Henri. Thank you.